Hello, this is Melissa, your insurance exam queen here. We are on this channel to help make sure that you pass your insurance exam with ease and confidence. In this video today, we're going to break down unfair claims settlement practices. Before we jump into that, please make sure to subscribe to the channel, like this video if it helps you understand the definition, and you can also drop a comment below about what state you're in, what exam you are taking, and we will give you an outline information of what is important and also how I can help you best pass the exam using my resources on the insuranceexamqueen.com website. We have both paid and free resources to support you, as well as a Facebook study group that you can join for peer support. So unfair claims settlement practices. This one is a tricky one. It is and it isn't. It's tricky in that the question they will ask you is usually something along the lines like, all of the following are unfair trade practices except. Now let's break down for a minute what an unfair trade practice is. It's something that an insurance company should not do. So it's something that an insurance company shouldn't do. So for an example, they shouldn't deny a claim without an investigation. They should investigate the claim before they say, no, we're not going to pay it. That would be an example of an unfair trade practice, is denying a claim without investigation. So when you get this question, all the following are unfair trade practices except, you're going to read a list of things that the insurance company should not do, because that's what an unfair claims practice is. So when you're reading that question, the correct answer is going to be the thing that an insurance company is allowed to do. So when you see all of the following are unfair claim practices except, you're looking for the answer choice that's like, oh, that's okay if the insurance company does that. And the other answers be like, they shouldn't do that and they shouldn't do that. Those are the unfair trade practices. And so there's a long list of them, and every state can actually have different ones. Sometimes when you're reading this chapter in your state approved text, like Excel, Kaplan, 80 Bank, or whoever you have, sometimes they will get into how quickly claims need to be paid. And that's going to be a state specific number. So sometimes they say claims need to be paid within 30 days of submitting proof of loss, 60 days within submitting proof of loss. Some may get into detail about that there may be interest that has to be paid if the claim is not paid on time. But you'll also see like a long list of things that the insurance company is not allowed to do. You don't need to memorize this list by any means. One, because you're likely to only have 1 to 2 questions on it. It's not a highly tested thing. They're not going to ask you a question on every single thing that the company is not allowed to do. But I do like to cover the ones that I have seen pop up the most. So like we already talked about, not investigating a claim. The insurance company should investigate the claim. They shouldn't just outright deny it. Another one is that insurance companies should not try and make you take a settlement less than what is fair or what you should get. So like, for instance, let's say that your dog bit me and it led to me going to the hospital. Let's say they bit my face. So it led to me going to the hospital. I had to miss work. I had to have reconstructive surgery. It was a big, intense ordeal. And your insurance company comes to me and says, here's $500. Take that and we'll call it a good day. Would that be adequate, offering me $500 when I lost work, have to have construction, I'm suffering pain and suffering, or I have mental pain and anguish, and I have to have surgery, and I'm spending thousands of dollars to fix this situation, and your insurance company says, well, here's $500, call it a day and be happy. That would be trying to offer me, they're basically, what it's saying is the insurance company is not allowed to lowball you. So they're not allowed to provide a settlement offer that is substantially less than what would be fair for me to get. Now, of course, there are limitations. Like if what happened to me was, $1 million of damages, but your insurance only has 100,000, they can only give me 100,000. But this is saying that they have the money available, but they're trying to offer you something much less than what you would deserve. So insurance companies are not allowed to try and make they're not allowed to lowball offer something. They're not allowed, how do they kind of phrase it? Like an insurance company cannot try to convince the customer to take a settlement less than what they would deserve if they went all the way to court. Trying to think of some other ones. Lying to the customer. They definitely should not lie to the customer. And many of them actually start with the word fail. So the insurance company shouldn't fail, right? So if they say failure to acknowledge the claim, failure to communicate with you, failure to investigate, these are all examples of unfair trade practices. So don't stress too much again about memorizing each one. More or less, you're going to get that question, all the following are unfair trade practices except, which means 3 of those things would be failing to investigate, failing to communicate, trying to get you to accept an offer that's much lower than what you would get in court. And the correct answer would be something they are allowed to do. And so that it's when you're reading that all the following are unfair claims practices, the correct answer is going to be something that the insurance company is allowed to do. So it's kind of common sense. Like I said, you don't need to super memorize every unfair trade practice. And if your state goes into detail about when a claim should be paid by and what date, and if there's any interest charges, if they don't pay by that date, then focus on that. But not every, I would say 30% of the states go into that. Most of them don't. But if they do, then it is important for you to lock down those numbers and memorize them for the state exam so that you can get those questions correct. So this is Melissa, your insurance exam queen. This has been a video on unfair claims unfair claims practices. There's also unfair trade practices. Those are more about the insurance agent. Unfair claims practices are more about the insurance company and things that they are not allowed to do. So again, please subscribe to this channel, like this video if it helped you to understand this material. Drop a comment, what state, what exam, we'll tell you what's important, and check us out at insuranceexamqueen.com. I'm sending you all the loves and all the vibes to pass the exam. Have an amazing day.